I just wanted to say congratulations for the great test results. I think we have another 4 weeks of school left, if you can hang in there till then. Discussing again the class with students before everybody logged on. I think these next 2 chapters will be a little bit easier for you than some of the other chapters we've done. We're going to have 2 chapters on payroll, and then our toughest chapters are the last 2 chapters. So I'm going to begin by sharing my screen, but before I do that, do you guys have any questions on anything? Ooh, I have to go shut my email down, or you guys are going to hear that beep. Give me 1 second. I thought I did that before. Okay, if you don't have any questions, then I'll go ahead and share my screen. Here's our agenda. So everything I'm showing you right now is, as usual, in the modules link. Use the agenda as checkoff sheets for your exam. By the way, speaking of exams, I would encourage you guys all to go in and see what you missed. And if you're not sure why you missed something, that's when you should come into my office hours, or we can Zoom at another time. Just make sure that you're learning from your mistakes. Okay, there are 2 major laws which are going to drive the next couple of chapters. We have 2 chapters on payroll. The way your authors structured the topic of payroll is kind of strange. I've never seen a textbook do this except for this one. They split taxes, and we're talking about payroll-related taxes, into 2 chapters. The chapter we're covering today are the taxes that you and I as employees will have to pay, and they're done through withholdings. They take the money out of our paychecks. They withhold it from us, and they turn around and feed the different federal and state agencies. Then chapter 11 is on the payroll taxes that the employer is responsible for. So you'll probably hear me emphasize, and you'll probably see me type EE when I'm emphasizing the employee pays this tax. And then ER, that's the next chapter. Chapter 11 is the tax that the employer pays. So again, had I written this book, I would have 1 chapter on payroll, and I would have put all the taxes in there, but your authors decided to split it up between 2 chapters. There's 2 major laws, as you see on the screen right here. So I would write those 2 laws down, or maybe even print out the agenda in your study efforts if you have a printer. The Fair Labor Standards Act, you're probably familiar with. You may not have heard the name, but if you work for an employer and they pay you time and a half whenever you work more than 40 hours, you are a beneficiary of the Fair Labor Standards Act. Basically, that says that from a federal standpoint, if you work more than 40 hours in a week, your employer is required to pay you above the normal rate at a rate of time and a half. California has some even more stringent laws. They're required in most cases to pay you overtime if you work more than 8 hours in a day, unless you fall under some type of a flexible schedule. But in any case, the author does a pretty good job of explaining that act. The other one that is a hot topic in our political system right now is FICA. And I want you guys to know what that stands for. Most of us have that little acronym or initial taken out on our paycheck. We see that FICA, but a lot of us aren't sure what those initials mean and how they came to be. So FICA stands for Federal Insurance Contributions Act. Federal Insurance Contributions Act. And it goes back to, I think it was the 1930s, I believe, when that law was passed. Don't quote me on the date. I've never been really good with dates. But basically what it did is establish 2 types of social benefits. The first one is the one that's, well, actually, they both are under hot debate right now. So Social Security, the first one, was designed to provide a system of retirement federally, well, they say federally funded, but you and I put into it. But it was designed to develop a source of income for when we stopped working, and we would be able to pull out of the system the money that we had put in plus earnings and so forth. So it is severely underfunded right now. If something doesn't change, it will go bust in the next 30 years Something has to change. It is a big, hot political topic because it has wide range of implications for both the workers who are you guys, the younger workers. You're going to fund the brunt of this because people are living longer. They're staying in their jobs, many cases longer. And so something has to happen. We're not sure exactly what. There's been lots of solutions. I say that lightly. Solutions thrown about out there, but since no one wants to seem to raise taxes or wage bases due to the political repercussions, we just kind of keep, I'm talking we as a country, kind of we're kicking the can down the road, so to speak. By the way, on these payroll chapters, I will not ask you to memorize any rates, and I will not ask you to memorize any maximums. They will be given to us. But Social Security has a maximum to it. The percentage of 6.2% hasn't changed in a very long time, but the amount of earnings subject to the tax continuously goes up. So that's Social Security. Of course, we'll demonstrate these shortly. And then the other part of that law or rule was Medicare. And Medicare was a system designed to provide medical care in your older years so that, again, when you stop working, you will still have a way to have your medical coverages funded. Again, another big political hotcake, for lack of a better word. There's a lot of questions about whether Medicare will be able to survive in a system where medical costs are spiraling out of control. So you can spend weeks debating the pluses and minuses of both of these programs. From an accounting standpoint, we want to know what it is and how to compute it. But you can have some very heated discussions on these. We're going to learn how to compute gross pay. And remember that gross pay might be calculated differently for hourly workers versus salaried workers versus someone that is paid commission-based. Maybe they sell things. So we're going to learn how to calculate gross pay. And then this chapter focuses, and again, you see me emphasizing the 2 E's, the employee taxes. Those are the taxes that you and I pay into through our payroll checks. There's 3 federal taxes that we're going to focus on. And in the state of California, as I'm sure you're all aware, we live in a very expensive state, and we have a pretty high state income tax as well. So we're going to learn how to compute these deductions. The federal income tax is a constitutional amendment. It established a pay-as-you-go system, whereby what used to happen back in biblical times, a tax collector would come up to your door, usually once a year, and knock on the door and say, Mrs. Johnson, you owe us, $20,000. And of course, I would say $20,000. I don't have $20,000. And sometimes you'd get hauled off to jail. So this rule, or actually was an amendment to the Constitution, established a pay-as-you-go system where you report to your employer whether you're married or single and how many exemptions you want to claim. We'll talk about that later too. And then they take, I don't want to say a little bit because it's a substantial tax, but they take some out every paycheck. And the goal at the end of the year is when you file your taxes, hopefully you've come close to just about breaking even. You might owe a little bit, you might get back a little bit, but the goal is to break even at the end of the year. We'll also learn how to calculate Social Security tax. And if you're taking notes, what you need to be really careful of when we do that is the maximum, which again, I won't ask you guys to remember, but just know there is a maximum. So the problem with testing comes up when you're really close to the maximum, but not quite over it yet. I'm going to show you an example. And then Medicare is a straight tax, a certain percentage. There are no maximums. They removed it in 1990, I think it was 1996. They removed the Medicare tax maximum. That one's probably going to be the easiest for us. It's just a straight percentage. And then there's other voluntary deductions. The ones you see above, those are mandatory. We don't have any choice into the matter. We have to pay into those. But the ones listed here under voluntary, Those are optional deductions that we can sign permission for the employer to withhold for us. Examples of those would be charitable contributions, for example, a foundation or maybe a cancer research or something that you would like to have funded by part of your payroll check. There's also savings plans deductions where you can have a certain percentage of your money put into a 401k plan or just a regular savings plan. I know that I pay into union dues. I kind of hesitate to call it voluntary because if I didn't want to pay, there would be ways I could get around, but union dues are sometimes not considered optional. And then something I really want to talk to you guys about later on today, I hope you read the handout called Even Teens Can Become Millionaires or something to that effect. We have to start funding our 401k plans. And what that means is unless you work for a company that has a pension plan, and by the way, those are becoming fewer and fewer every year, you want to be able to put money aside. Sometimes employers will match it. I have a handout that I want to talk to you guys about because I think that that's one of the most important things in the payroll knowledge that the author's trying to get across to you, but he does not spend very much time talking about the benefit of 401k plans. So I'm going to try my best to cover that in a bit. And then finally, what you have left after all those deductions have been taken out is the net pay or the take-home pay. And of course, as you guys know, the only way to get transactions into the accounting system is through the journal entry process. So we'll be covering those journal entries as well. So we took a while going down that agenda, kind of telling you about some of those laws and acts as we go. That's a lot of talking to do without really asking you guys if you have questions, but I did want to, again, encourage you, especially in our last push toward the end, to use that agenda as a checkoff list when you're studying. Any questions? Because I don't have my tutors in here, let me just go check the chat room. Okay, I think we're good. So I'm going to go share my screen again, and let's go take a look at some of the PowerPoints. Again, you guys have these PowerPoints in your modules link. I'm not going to go through all of them. In fact, I've taken out some of them even before class started. The reason that this slide is up here is because there's been a big push by the IRS to differentiate between employees and independent contractors. And there's a test that the IRS has to decide whether you're an employee of somebody else. For example, for me, one of the people I work for is Cerritos College. I'm considered their employee. Why? Because they control and direct what I do. Usually in a non-pandemic, I'm using their rooms and their equipment and things. I have scheduled hours that I work, and the school or the employer determines how you're going to complete the job. And they give you examples of that. Independent contractors, the reason the IRS is making such a push towards this, because independent contractors have to pay both the employer and the employee portion of these payroll taxes. And so a lot of people have been trying to skate under the radar, so to speak, considering what they do work as an employee when they really should be classified as an independent contractor. And that's a big other can of worms. But I wanted you to know that the discussion is out there, and there are certain criteria put forth by the IRS. If you believe this affects you in some way, you can Google IRS independent contractor rules, and they'll give you a little checklist that you can follow. The Fair Labor Standards Act of 1938, I already mentioned this before. It basically says that if you work more than 40 hours in a week, your employer has to pay you at time and a half. We've talked a little bit about that in a previous chapter. So now we're going to go through some of the taxes. I think, again, I'm a hands-on, let's jump in and get our hands dirty. I'm going to compute a bunch of these on your homework, but I thought that the PowerPoint presentation did give a pretty good overview of what the different taxes are. I mentioned that this rate goes up. It's not the rate that goes up. It's the earnings that go up every year. But the rate has stayed fairly similar at 6.2% for as long as I can remember. And again, we talked about what this was designed to do. It was designed to provide for retirement, disability, and death benefits. There's also a small survivor's benefit if someone passes away. So Social Security tax, let's get this into your notes. It is a dual paid matching tax. What the heck does that mean? It means that I contribute a certain amount, 6.2% of my wages up to a certain amount, and my employer pays a matching tax. So FICA, which again stands for Federal Insurance Contributions Act, is the combination of Social Security and Medicare. So in your notes, it is a matching tax. So whatever you and I put in from our paychecks, our employer has to match it. So that's unique about the Social Security and Medicare tax. What we have to be careful of, and this earnings base changes all the time, what we have to be careful of is that when you get close to the maximum, you got to be careful that it doesn't push you over. And your book uses a different rate. It changes all the time. I think they use 132,900 right now in your book. You will not be asked to memorize any of those. And then the Medicare tax is just a straight percentage. There is no maximum. So whatever you make, again, you multiply it by that percentage. We'll be practicing the calculation in a minute. And then again, you pay in and your employer pays into the fund. And hopefully when you and I are older, if the Medicare program's still around, that will help us fund our elder year Medicare medical costs. I know that, again, not trying to get too personal, but I know from my own experience, having suffered through a period of time where there was lots of medical expenditures, more than I could ever imagine. I know that I am planning my retirement plan right now so that I'll be able to also fund a secondary insurance, because Medicare right now in its present form doesn't cover as many things as I foresee coming down the pipe when I'm elderly. And so I would say that when you guys start thinking about retirement, and I know that seems so far away because most of you are young students just starting out in college, but I think it's really important that once you get set up in your career job, you start thinking about what are some future retirement goals that you want to have. And one of them for me is going to be to also have a secondary plan of insurance so I can get the medical care that I perceive me needing and my husband needing. Okay, then there's state and local taxes as well. I didn't see a slide in here yet for federal income tax, but it may be coming later. These next two slides, I'm going to save this for the next chapter, because remember what chapter 10 covers, 11, excuse me. Chapter 10 is the employee taxes. Chapter 11 is the employer taxes. And those employer taxes are FUTA and SUTA, or federal and state unemployment. So that's going to come back in the next chapter. Workers' comp is not necessarily a tax, but a form of insurance. We'll hit that hard on another day, but not today. So they also go through and show you examples of records by law that the employer is required to keep on the employee. And I think that is probably enough to get us started. I think we're probably ready to just jump in and try a couple of these. And again, I make an assumption when you guys come into class that you've read or at least scanned the chapter, or that you've read the Learn Smart. That's another way to read the book, is through the Learn Smart module. I don't assume that you have zero knowledge coming in. So if you hear me say something or demonstrate something and you're not sure about it, please ask questions. All right, so let's jump into the homework for this chapter. And I have been having some technical issues today. Let's hope this is not one day of them. Okay, there we go. So I'm going to go back to the first problem where we're going to ask to be calculating gross pay. Okay, gross pay, just for the definitions, means what you earned before taxes. And this is really important to compute this correctly because it's going to be the basis on which all the taxes are calculated. So if you bomb the gross pay computation, you're also going to bomb the withholding calculations. What we need to remember is that we have this thing called the Fair Labor Standards Act. And if you work more than 40 hours in a week, then your employer has to pay you at time and a half. So I'm not going to go through all of these in the interest of time. I'll probably go through the first two. So I'm going to put employee 1 here and employee 2 here. And we're going to make columns now for the gross pay. Let's see, let's do it 2 ways. Let's do regular hours. We'll make a column for that. And then we'll do overtime hours. And on the regular hours, that's the one that's subject to the limit of 40 hours following the law. So this first person makes $11 an hour and works 46 hours. So the way this is going to work is we're going to do the first 40 hours at the regular rate. Okay, and that regular rate for that first person is $11. Put rate. So that will give us his or her regular pay. I'm going to highlight that and let me make the column bigger so you can see it. So here's my regular pay. In addition to that, we're going to have overtime, and overtime based on that Fair Labor Standards Act is paid at time and a half. So the other 6 hours, here's where the difference comes in. The rate is at time and a half. So if the regular rate is 11, we would take 1.5 times that. So I'm going to do that on my calculator. 11 times 1.5. Here's the overtime rate. I'll change that to overtime rate. I'll go ahead and do that calculation. This will be my overtime pay. Any questions so far? Please speak up because I can't see the chat room if you're able. Okay, here's my regular pay. Let me make it yellow so it stands out. Here's my overtime pay. What they wanted is your total gross. So I'm going to add those two up. And when I take 440 and I add in the overtime pay of 99, I got 539. Okay, the reason that this number is important is because all the taxes are going to be based on that gross pay. Okay, then I'm going to give you guys a few minutes to do employee number 2. I'll go ahead and do it on my screen. Why don't you try scratching it out either on your Excel spreadsheet that you have or on a piece of paper, and we'll compare answers. Okay, so I'm just going to work through it, but I'm going to be quiet. If you guys have had a chance to try it, and if not, you can always pause this if you watch it later. I got 536.31. So first major challenge in the chapter, other than being familiar with the laws that lead up to the calculation, is how to do the calculation. Okay, the part you got to be careful of is the overtime hours are paid at time and a half. Okay, let's go take a look then at some of the deductions that all of us in this room probably pay into. So I'm going to look at the next one, which is 10.3 and 10.4. And not only are we going to look at this, I'm going to make up another example that I don't think the author covered too well as far as maximums go. So before I go any further, and I didn't want to take that away too quickly, does anybody have any questions? Okay, then let's go take a look at this. Social Security, just like the exam, we're going to give you the rates, 6.2%. That has been the rate for a long time. And in this case, the max they're going to use is 132,900. That max goes up every year. So we'll do the first two employees together. But I do want to give you another example that the author doesn't provide. And I know you're going to see one on the test, so I want to take the time to do that. So here's the December salary. What you got to be careful of is that year to date, this is not going to push them over the max. And when I first glanced at this, I thought, okay, this guy's made 120. This might push him over the max. But you notice that since he only made $12,000, not only, but he made $12,000 in December, that doesn't even push him over the max. So we're going to do the first two examples, which are pretty straightforward. And then I want to give you another example where the person's close to the max, but hasn't yet gone over. So that creates a little bit of an accounting dilemma. And I want to make sure that we cover that. So I'll probably make up an example for that one. Okay, so we have two employees. We're going to do the first two here. And we want to see what their December salary was. Okay, that was given to you, $8,500 in the first instance, $10,000 in the second instance, and neither of these two employees is close to going over that max. Neither one of those, even with the December salaries added in, is close to going over that 132,900. So this becomes a very straightforward calculation. All you're going to do is multiply by the rate, which they will give you. It is 6.2%. And let me tell Excel to add on one more decimal place so you can see that. And when we do that, let me carry that rate down. Try one more time. Control C is the copy command. Control V is the paste command. That's what I'm using. And go ahead and calculate that out on your calculator, and we'll compare answers. I got 527 and 620. That will be paid by both the employee and the employer. It is a matching tax. You and I pay into it, and our employer pays into it. Did I hear a question?
How did you get Excel to show you 3 decimal places?
Oh, okay. So if I click in the gray column up here, Maggie, in the gray area, wherever you have that, right here, there is the increased decimal, and right here is the decreased decimal. So if you click that 1, 2 times, however many decimal places you want, that's how you control the number of decimal places.
Okay, I got it. Thank you.
You're welcome. Okay, I'm going to make up an example because I don't like the lack of examples on this one. So let's do a harder example. Let's assume that the employee has made 130,000 year to date, and that would be before December's payroll. Okay, and in addition to that 130,000 year to date, this guy has made, or this woman has made, another 14,000 in December. I just totally pulled that number out of the sky. Here's what we have to be careful of. because this person now is getting close to this maximum, or the technical term for that would be a threshold. They are now, since they have made 130,000, they are really close to going over the limit. So that's what you got to be careful of when you have someone that's close but not yet there. Although this person has made 14,000 in December, do you see how only 2,900 is subject to the tax? Okay, how did we get 2,900? They've made 130,000 year to date, and the maximum here is 132,900. So even though they're made 14,000 in December, only $2,900 of the wages is subject to Social Security tax. Okay, so if we had to calculate that, even though they're making 14,000, their Social Security tax would be 2,900 times that 0.062. And whatever we get when we do that, 2,900 times 0.062, their Social Security tax is relatively low compared to these others. That's because this person has now maxed up or maxed out. And I know we said that this is December, but if there was another month following that, and I know that the calendar year ends in December, but just like a what if scenario, if there was another month after that, he or she would have to pay no more Social Security tax for the remainder of the year. And on January 1st, we all get a clean slate and we all start fresh again. So any questions on that?
What do you mean by getting close to the threshold? Like, what is?
Okay, good question. So here's what I want to show you. Let me see.
Like, I see there's the max, but what happens when you pass the max? You said you don't have to pay any more Social Security?
Not for the rest of the year. That's right. Yep. So this guy has made 130 here, but the maximum is 132,900 in this example. So he's only 2,900 away. That's the maximum amount he's going to pay now on this tax. And if there was another month, if this were October, let's say, then the rest of the months he would have no Social Security coming out of his paycheck because he's maxed out.
So that means like he'd get everything that he'd earned?
Well, he wouldn't get everything, but he would not have Social Security. He'd still have to put in for his federal tax and his state income tax, but he would not have Social Security.
Why does Social Security have a max?
Well, that's a question that's in Congress right now. They always raise the max, but some people are saying, should there even be a max? Or should the people that are earning millions of dollars in the system be made to pay those taxes on those millions of dollars made into the system? Their argument from what I will term loosely rich people's perspective is they're going to never be able to pull it out because there are maximums later on when you retire. If you make a certain amount of money outside of the system, you won't be able to draw on it. I'm not going to comment on the political issue related to that, but that is the issue behind it. So Congress in the initial law set up that there would be a maximum, and almost every year they have slowly increased the maximum. But what some people are asking right now is, should there be a maximum, or should everybody be funding the system? And those that have the ability because they make more, should they be putting more into the system than other people? That's a political question. Yeah.
Oh, I already know my thoughts on that.
I'm sure I have my own too, but I don't share political views in class. I try and stick to the accounting. But
Right.
that's a discussion that needs to happen for certain. That would be one way of helping alleviate some of the shortfalls of Social Security.
Oh yeah, definitely.
Okay. Medicare then, unless you guys have any questions on that. So make sure you star that, make sure you give that example another period of your attention, because I do remember there being some questions on the exam where the person was like that, close to going over. And I don't think the author did a very good job of putting those examples in the book. Okay, the second one says, take the same exact thing that we just did, but this time calculate Medicare tax. The reason that Medicare tax is so much easier, and Maggie, this kind of goes back to what you were saying, there is no limit for Medicare. In fact, now we have a supplemental tax, but your book doesn't cover that, so we will not get into it. But there is no limit for Medicare. So let's go take those employees 1 and 2 again, the same employees we just got done taking a look at. This would be very straightforward. All of their wages in December, so let me highlight this again, December wages, all of their wages would be taxed for all of the year. There would not be a max on this. And remember, you guys don't have to remember the max. I will give it to you on the exam, just like the author did. Here's the rate, 1.45%. So 0.0145 is how this would look. And let me make this decimal a little bit bigger so it will show the proper rate. Okay, let's see what happened. I lost my increase. Here it is. There we go. So you have to show at least 4 decimal places on that one. I'm going to go fix that whole column to show it. And 0.0145 here, same thing. Zeros on the end don't count in calculation, so it doesn't matter if you have an extra 0. We'll multiply that across, and you guys can check on those 2. There may be rounding issues, so remember the rules for rounding if it's been a while since you've had them in your classes. If that last digit, let me get rid of this extra 0 so as not to confuse you. If that last digit, when you get this number, if that last digit is 5 or over, you round up. And if it's under 5, you round down. So same normal rounding rules. I don't think Medicare will give anybody a problem because it's a straight percentage. We have our calculators also. Many of us have percentages on our calculators, but there's also a large number of calculators that don't. So I am writing out the percentage as a decimal, which means you move the decimal place 2 to the left. If you guys have a percentage key, of course, you can just enter that. It would look like that into your calculator. Now let me put that back as a percentage with a couple decimal places. Whatever your calculator have, use that feature. Okay, that is Social Security and Medicare. Now let's go to the real whopper of a tax, the one that I know I pay a lot into. I know you guys pay a lot into it. Federal income tax withholding. Again, this is designed, I'm going to put some notes up here. This was designed as a pay-as-you-go system. Because again, before this system, tax collection was really difficult. You had a tax collector who they were not well liked. I don't think they're well liked today either, but in the olden days, they were really not liked. And someone would come walking up to your door and tell you owe a bunch of money and nobody had it. So now, because of this amendment to the Constitution, we each have money pulled from our payroll checks and our employer funds that money over to the IRS or other taxing body. And then you and I file tax returns at the end of the year with the goal of breaking even. Okay, now in your book, when you do your homework, there is an embedded table. I don't think this table is embedded now because it's in my Excel spreadsheet. But the form that you fill out to tell your employer this needs to be in your notes, is a W-4 form. And the PowerPoint does have an example of the form, except that it was overhauled recently and it looks a lot different. And on that form, you inform your employer whether you're married or single, okay, or in my case, I claim married, but filing at a higher single rate because I need to have more taxes taken out of my payroll check. And you also provide the employer with the number of exemptions. Now, what many people think, wrongly think, is that you can only claim an exemption. This is on your W-4 form I'm talking about. You can only claim an exemption for yourself and maybe someone who lives with you and maybe for a child. Okay, that is not the case. You can claim as many or as few exemptions as you want. Just remember, at the end of the year, you're going to square up when you file your tax return with the government. And if you under withhold, if you don't have enough taken out of your paycheck as the years go by, or as the months go by, excuse me, then you wind up with a hefty underpayment tax. Okay, so I hope that my computer still has my table open so I can demonstrate this to you. They gave us their salaries here, and now we need to understand how to go use that table. By the way, if you guys want to look up the table for your own reference, it is called a Circular E, and it is part of what the IRS will call Publication 17. I don't expect you to remember that. But we're going to go use the tax table. Maggie, did you have a question?
Yeah, so for the W-4 form, just for exemptions, like the less taxes, are you talking about like less deductibles? So like they'll take out less percentage from your pay so that you have more to support, whoever you're supporting?
Yes. So let me go show you a table because I think that will make more sense. And I did open it at the start of class. Let me go see if it remained open, or sometimes, I don't know if you guys have had this experience, the book will kick you out of it if you take too long.
Yeah.
Here it is. Okay, so Maggie, I'm gonna answer that question. I'm not putting you off. Here is a single person's tax table. And if you're looking in your book, it's figure 10.2. I was looking for a page number that I could throw out to you, but I don't see a page number. Anybody else have a page number? Page 330, it looks like, in your book. Okay, here's what you fill out. This is what you and I fill out. I give this to Cerritos College. I tell them whether I'm single or married. For me, married, but holding out a higher single rate because I want more taxes taken out. And you tell them how many exemptions. Okay, now I live at home with my husband. So most people think, and I don't have any small children here, most people think that I should be putting 2. Okay, but if I want them to hold out more taxes or I want them to hold out less taxes, you have the ability to control that. Here's what I want you to notice. Let's just go pick the last line on here. If you make between $590 to $600, you'll notice that if I claim 0 exemptions, they're going to withhold 75. And if I claim 1 exemption, they're going to withhold 66. This is what I want you to notice. The higher the number of exemptions go, what do you guys see happening to the tax?
The less you pay.
The less you pay. Now, remember, you got to square up with the government. So here's what I did at a time in my life. And I can't remember if I told you guys about the period of my life where I had like 7 surgeries in a very short amount of time. When you have something like that happen, you need all the money you can muster to make medical payments and just to juggle the family if mom's, out sick. So there was a time in my life where I used this to my advantage. I knew I was going to have a lot of medical expenses coming in. So instead of the normal married with 1, at the time I was single, or single with 1, I would do single with 10, right? Then I'd have just a little bit of tax left. I had the money there to support the family. And then I knew I would square up with the government later. I wasn't worried about underpayment because I wasn't working for a long period of time. So maybe in your book, read a little bit more about what an exemption means. That doesn't mean that when I get to my tax return, I can't claim 10 exemptions. That's not what that means. It means that I'm temporarily adjusting my withholdings because I have a life circumstance going on at home where I need the money to pay my bills, and I will square up with the government at the end of the year. I do want you to notice that there is a table for single and for married. Go ahead.
So when you say square up, you're saying like pay them back that money that they should have been taking?
Well, in my case, I went for an income for so long, without an income for so long, because of all the surgeries that there was no problem squaring up because my income was cut way back. In addition to that, my medical expenses were sky high. So I don't want you to get the wrong impression that somehow on my return, I claim that I'm single with 10. That didn't happen. I was still single, 2 kids at the time, two children at home. So I was claiming a total of 3 exemptions. That is not the same type of withholding allowance that you see on this table.
Mm-hmm.
Any questions on that?
Just emphasizing what you mean by squaring up.
When I say squaring up, I mean, I've put in and you put in too to this pay as you go system where they're taking a little bit out of everybody's paycheck. When I say square up, I mean, when I file my income tax return, my 1040 at the end of the year, basically what happens on that form is you compute the amount of taxes that I am legally obligated to pay, and then they compare it to what I had withheld. And if I over withheld, I'm going to get a refund. If I under withheld, I have to fork over more money to the government. That's what I mean by squaring up, filling out that tax return.
Okay, I thought so. I just wanted to make sure I understood that.
Yeah, no problem. Anybody else have any questions on that? You'll notice that the ones they give us in the book are for weekly payroll periods. If you're someone like myself at Cerritos College anyways, I get paid monthly. I would need to find the appropriate table for the monthly payroll period. All those different periods are within that publication that I mentioned earlier. So now having this in front of us, this will make a little bit more sense. Let's go calculate at least one of these. If I can get my spreadsheet back.
Actually,
go ahead.
So you said that you would file for married but at a higher single rate.
Yes.
So they're gonna take more from you so that at the end of the year you don't have to pay?
Yes, you can either avoid that underpayment penalty that I would incur if I didn't do that, or you can even tell your employer to withhold, married with 2 plus $400. You can tell them to withhold an additional amount as well, so you don't wind up underpaying your taxes. The alternative to that is you can make quarterly payments to the IRS instead, but most people don't like to go that route.
Yeah, because how would you know what to pay?
You do a little calculation. You do what we call a pro forma. You really don't need an accountant to do it. There's a really good calculator. I think it's called withholding calculator on the IRS website. And if you get a payroll check stub and you input how much they withheld so forth, and you project what you're going to make for the end of the year, it's a pretty good little system. I was shocked that it's on a government website and it's fairly accurate. Yeah. Okay. Let's go take a look at this first employee who is married with 2. So I'm going to write M2 because that's the standard lingo you're going to see. And this person makes $675. So what we want to do is we want to go look at that circular E, that's what it's called in the tax code. And we want to make sure that we go to the married table, and we want to go look up this gross pay number, this 675. So let me go pull up that table. And I think that person was married. So I'm going to go down to the married table. Here's the columns you want to look at. Now, keep your finger on the 2. He or she was married with 2, and we're going to take our finger down. In this case, I'm going to take the arrow down, and I want the 2 to intersect the amount that he made. I think it was 675. So right here, it looks like that would be $47 if I remember that correctly. Do you see how to do that? You look up for the number of exemptions, and you take your finger down until you hit the pay period, the gross pay between 670 and 680. It looks like it's 47. So I'm going to go back over here, and the answer to that first one would be $47. Did you guys catch that? Any questions? So if you're provided a table like that, you need to be able to know how to use the table. And this on your check, by the way, on my check, it comes out like this. It says FIT, which stands for federal income tax withholding. Sometime you'll see it just typed out federal. I've seen that. And sometimes you see, let's see, FWT, federal withholding tax. And that goes into a fund in your name, with the employer as a conduit, which means he takes the money from you and funds it over to the IRS in your name. So the IRS is keeping track, and so is the employer, of all the amounts withheld. And that's why you have to square up. Again, Maggie, square up means to figure out if you had enough withheld from your paycheck when you do your 1040 tax.
You said FIT, federal tax withholding?
It could be FIT, federal income tax is what FIT stands for. I have seen it as written out as federal, and I have also seen it as FWT. I remember specifically my son getting his first job at Smart and Final. I think he was 16. And he said, "Mom, they're ripping me off." And I said, "What do you mean they're ripping you off?" And he said, "There's FWAT and SWAT and all these things withheld from my paycheck. And I don't know what the heck that means." Well, you know, he was having, what he was referring to was federal income taxes, and the SWAT was state income taxes withheld from his paycheck. And as a new worker into the corporate America, so to speak, taxes become part of what you and I pay. Any other questions? I think we'll leave that because I want to have time to do this last problem. I believe this was a 10-point test question. So does anybody have any questions on how that federal income tax withholding works before I move on? Okay, this is the one I want you to star. Last semester anyways, I had a 10-point question. I believe it will be very similar this year when I do the test. So highlight that. The reason I like this question is it covers pretty much everything that we've talked about so far. The one thing that was missing from it was the actual journal entry to record the payroll. So if I have time, I'm going to show you how to do that journal entry, even though this question doesn't necessarily ask for it, because I think it's really important. Okay, so basically what we're going to do, we'll read this together. We're going to calculate the gross pay and all the taxes for one person that works for this CAT Commercial Builders. Okay, they give us his pay rate, $14 an hour. So that would be something that you'd probably want to focus on. That's going to become important. And he receives overtime pay at time and a half, not because his employer is nice, but because that's a federal law. During the payroll period, December 31st, so now we're in the last part of the year, he probably has some wages prior to now, he worked 48 hours. He's married and claims 3 withholding allowances. So let me see if I can go back to my regular pencil. I'm going to write down that he is married with 3 because I'm going to need that for that circular E. And he's claimed that on his W-4 form. The reason I'm circling that, because I will ask you guys what a W-4 form is called. By the way, I will not have you completing any forms. Some of the exercises and problems in your book have you filling out tax forms. No way I'm going to ask you to do that. It's above the scope of this class. If you're an accounting major, you'll learn how to do that, but I'm not going to ask you to do it. And so far, he's made about $30,000, around $29,260. Okay, what that tells me, I stop and right away I tell myself, okay, this guy is not even close to going over the Social Security max, so I don't have to worry about that. So step 1 is to calculate his gross pay. Okay, well, it said that he worked 48 hours, was it? I lost it, 48 hours. So we'll do 40 regular hours. So sorry about that. My computer is hopping. Let me get out of this draw mode and see if that helps. Okay, 40 hours at his regular rate of 14. And that means he's working 8 hours at time and a half. So the way I'm going to get time and a half is by taking that 14 and multiplying it by 1.5. Time and a half is expressed as 1.5. Okay, so I get 21. You might even be able to do that in your head. So here's his hours. Here's his rates, and here's the total. Remember that all the withholdings that we do for this person is based on your ability to correctly calculate gross pay. So you want to give that a second glance on an exam. You want to make sure that you did the gross pay right. I would do it a couple times just to be certain, because if the gross pay is off, that means all the deductions are off. Okay, so I'm going to take 40 times 14 for his regular pay. And I'm going to do the same thing, 8 times 21 for his overtime pay. And when I sum that up, his total gross, don't forget what gross means. It means amount before withholdings, is 728. Okay, so step one, can you calculate the gross pay? And let me go, they didn't specifically ask you to do that, but it's given in the fact that it's going to be the basis for all the rest of these taxes. Okay, so now in this chapter, remember what it's called. It's called employee taxes. These are the taxes that you and I pay. What do they call it? Payroll computations, record, and payment. This is for employee taxes. So I'm going to go right down the list, and I'm going to use his list. I'm going to calculate Social Security. I'm going to calculate Medicare. I'm going to calculate the federal income tax. He gives me the health premium, and he gives me the credit union deduction. Those last two are optional amounts. These first three are mandatory payments. He obviously does not live in California, because you and I know that there is a very hefty income tax in the state of California. I've had more than a handful of friends move out of the state because of that, when they can go live in a state like Texas or Florida or Nevada and not have to pay an income tax as far as the state tax goes. So let's calculate these. The starting point for this is the gross pay. So I will write down the amounts for you, so you'll have a good set of notes, but I'm going to let Excel calculate it. So I'm going to put the amounts in here, but I'm going to go let Excel electronically calculate it. So you guys can do that with me. 728 times 6.2. I got 4514. That's going to be the amount of Social Security that I have taken out. Don't forget, in the next chapter, we'll learn that our employer is going to match that for us. There's the Medicare, $10.56. The federal income tax is going to be a little bit more challenging. So remember, this guy is self-reported as married with 3 exemptions. So we need to go find the married table, and we need to look up 728. Okay, so I'm going to back out of here. I hope I can remember. This is the married table. He is married with 3, so you want to look down this line. And I think it was 728. So I'm going to go all the way down to 728. And here we go. It looks like it would be $45. Hopefully you guys can see that. Let me go back, put in the $48. That is the pay-as-you-go system that was established by the 16th Amendment, so that we have I don't like the word little because it's a substantial amount, but we have some taken out of our paycheck in this case, every week. And hopefully it's about equal to what our tax return is going to say that we are responsible for. The health premium he gave us, he said it was $150, I believe. And the credit union, I think you guys should seriously look into having some type of a savings plan like this, where you can identify an amount to be put away. I remember being a child, and I never understood why until I was an older adult. But my mom used to withhold money from our allowances to put in this Christmas savings account. And then when Christmas came around, the stuff that she had withheld from us, she gave us in this little bucket and said, here you go to buy, gifts. So you can do the same thing other than through your mom. You tell Cerritos College or whoever your employer is, hey, I would like to have $25 taken out of my paycheck and deposited with my bank. And then sometimes if you work a seasonal job too, you can put some money aside so that when that time comes over, the money's already there. That was 25. I have not forgotten about the 401k plans yet. If I have time, I'm going to do that today. And if not, I'll do it tomorrow. So here's the total deductions. This is all the amounts that are going to be taken out of my paycheck. Sometimes you may have a rounding error come up. In this case, it looks like I do. There are ways to prevent that in Excel that I'm not ready to go into, but this should probably be 278.70 if you go back and you do it with your calculator. So we won't worry about that penny rounding error. My net pay, which means this is the amount that I'm going to take home from my paycheck, is the difference between the gross and the deduction. So let me write that down. It's the gross less the deductions. And so when I take the difference between those two orange numbers there, you have $449.30. That's this person's take-home pay. Now, there's one more thing that I would like all of you to be able to do that I don't think the book really does either. I would like each one of you to calculate the percentage of your payroll check that you take home. How do you do that? You take the net pay, that green number, and you divide by the gross pay. So I'm going to do that. I'm going to take that net pay and I'm going to divide by that gross pay. And I'm going to express this as a percentage so you guys can see that. This person with those numbers takes home about 61% of their paycheck. So in the state of California, and again, this person did not have any state income tax taken out. In the state of California, the average take-home pay for us is 68 to 69%. So what's happening with the rest of that money is, again, a political question. Is that money being well spent? Now, some of this was optional, remember, but your take-home pay, let me write that down in words, is your net pay divided by your gross pay. So that would be a great 10-point test question. We're going to do it together in a second. I'm going to finish the journal entry. This question did not ask you, unfortunately, to do the regular journal entry to record the payroll. So that is the one downfall that I will say that I have with this question. It didn't do enough. It didn't teach you that the employer would have to do a journal entry to record that. All right, so number one, compute their regular overtime, gross and net pay. Done. Number two, assuming the weekly payroll has been recorded, this is what they didn't have you do, journalize the payment of his wages. Well, for your homework, here's what happens. When they pay this person, they get rid of the liability, salaries payable. And of course, unless they're going to pay you with M&Ms or beer or something, which I have seen done on a construction job, you're going to credit cash. But what I would have added another requirement in here. And I want to teach it to you while I still have your attention. What I would have preferred you do in this problem, I hope the author changes it in the next version of the book. I would have asked you to record the payroll, because I think that's the part that students have the most challenge with. So let me show you here. The longest journal entry that you're going to see in this class is the journal entry to record the payroll. And I think people flip through the pages of the book and they kind of freak out because they're used to seeing a debit and a credit. On most journal entries, we have a debit and a credit. Because the employer's taking these 5 things out of your paycheck, there's going to be quite a few credits, because remember what these things are. They this is our money being taken from us, owed to a government agency. So what kind of an account do you use when you owe somebody money? The employer is going to use payables. So let me show you what this would look like. There would, whoops, I didn't mean to hit that button. There would be one debit to wages expense, or alternatively, you could use salaries expense. For the gross pay, I'm going to go grab that. It was $728. And again, I mentioned this is the longest journal entry you're going to see in this class. And the reason is each one of these deductions creates a payable. So I'm going to have a Social Security tax payable. Okay, and all I'm doing is I'm bringing each one of these deductions down here down and recording it in a liability. So they need to fork over $45.14 for my share of Social Security. And they need to fork over the Medicare monies that they took from me to give to the government in the amount of $10.56. I'm just copying each one of these down. Okay, you'll see me drop each one of these down. And then I just keep going. The federal income tax, that's my money that the government has taken away out of my paycheck, and they need to fork it over to the IRS collecting body. Health premium, that's going to be something like Kaiser payable or Blue Cross payable, or I'm just going to use the generic health insurance payable. But whoever they owe that, your contribution on that, you're going to write that down as a payable. So again, look at all the liabilities that these two payroll chapters are creating. We're going to have a credit union payable. Why? They took money from me and they need to fork it over to, in my case, it would be the Long Beach Schools Federal Credit Union, I think is what it's called. If you have Bank of America, it's going to be Bank of America, but they need to fork that money over. And then what the heck's going to balance all of this stuff out? Well, the rest of it, they owe to you. So that's where that wages payable number came from. And that wages payable, let's see, how come I have a different number? 452.30. It's very possible that either I made a mistake or there is a book mistake in here. I'm just going to go with the number I have. They may have had a different amount of income tax withholding. So if you come up with a different number, that's fine. For what I'm doing right now, I'm going to change this and I'm going to do the math here. I'm going to take the gross minus all those deductions. Let's see what I come up with. 449.30. So what I'm going to do in the interest of time is I'm going to change this amount to be 449.30. Based on the numbers we have, it's possible that I didn't read that table right. And I don't want to go and check right now because I have something bigger and better that I want to talk to you about. But it is possible that this number is a different number. I did not look closely enough. What I want to do now with the 5 minutes I have left, and we'll talk more about this next time, but I want you guys to read How a Teen Can Become a Millionaire. Okay, and it's in the handouts chapter, and I did pull it up. This is it. And it is a little dated. However, I think the point it makes is excellent. I don't think students are taught in high school how to invest. I don't think students taught in high school know what the power of compounding interest is. And so I want to give you this easy example. We're going to talk more about it next time, but I want you to read it at home in your own time right now. But this is what I'm going to be reading about. And I'm going to show you a table. And this is why I want you to take to heart that we need as a population to start saving sooner in life. And I know that's so hard to hear because I remember being a starving student and just, living with the top ramen and the bread and peanut. I get it. I remember that. But we're talking about when you get in your career job and debt isn't something that's consuming you as it does sometimes when you're a college student. I just want you looking forward at a very simple example of how you can start saving early for your retirement. Okay, so this talks about the power of compound interest. Here's the little scenario. It's like a paragraph long. Ben and Arthur were friends who grew up together. They both knew that they needed to start thinking about their future. At age 19, okay, this is key. He's 19 years old. He decided to invest $2,000 for 8 years. And he picked a fund that had a 12% interest rate. Okay, so stop. This 19-year-old puts $2,000 a year in for 8 years. Calculate that in your head. $16,000 is what he put in, the first guy. He found a fund that earned 12%. Is that reasonable? Yes, they are out there. You need to know how to find them. Okay, then at age 26, he stopped putting money. So he put a total of 16,000 in. Now, Arthur waited. He waited until he was 27. Okay, that's probably closer to what most of you might be able to do because we're starving students. You might have to wait a while. Just like Ben, he put 2,000 into his account, but he did it every year until he turned 65. So first guy, 8 years, 2,000, 8 years, I think it was. Second guy, his whole life from the time he turned 27 until he turned 65. So let's see what happens on this table down at the bottom. This is something you'll learn about in Accounting 101, but I wanted you to preview it. So again, this guy puts 16,000. This guy puts 2,000 for life, but he waits until he's 27 to start. Look what happens after retirement age when they're 65. This first guy that put in the $16,000 because he did it consistently at the very beginning of his working years, he got 2.3 million, we'll call it. The other guy that waited until later in his life, I think it said 27, I'd have to go look, but he funded that retirement account every year at 2,000 until he retired. He wound up getting a nice sum, but it was significantly less than the guy that started at the younger age. This is what we call the power of compound interest. This is something that you can achieve through tax-free investing called a 401k plan. So the way it works, and we'll talk about it more next time after you've read that, but a very easy example, very oversimplified, let me bring this over here, is let's say that I make $3,000 a month and I have $200 taken out in a 401k plan. By the way, the reason that it's called a 401k, it's an actual part of the tax code. It refers to a code section. Here's what happens. I'm only taxed on $2,800. This is now my gross pay for taxes. So I have monies withheld just on the $2,800. The even better part is not only am I paying less in taxes, that $200 that I'm self-directing, I can direct it to go into something as safe as a savings account that's only going to earn 1% interest, or I can have it go into a stock fund or a bond fund. You direct where the money's going through the administrator of the plan. And then that 200 grows and grows and grows. You saw what the chart said. It grew and grew and grew into the $1 million range. And again, remember back to that example, he only put in 16,000. The rest of that was derived from doing it consistently at the same time, hopefully every month, because it compounds even faster. In the example we just saw, it was compounded annually at the end of the year. But I want you guys to take this to heart. And even if it's $20, you would be amazed. And if you guys take the Excel class, we'll do some retirement projections. But even if it's $20 and you do it consistently from a young age, you will be absolutely amazed at how much that can become by the time you retire. The key is start young. My parents didn't save a dime for retirement until they were in their mid-50s. And so they didn't have a lot of time because they stopped working, I think at 63, I think it was. not a whole lot of time for the money to earn interest and compound. So as hard and as difficult as it is to be thinking about something like that in your early years, it's something that's very powerful. It's something that we should be teaching our children about. My mom taught me how to save, not from that perspective, but the little, cup, we had to put 10% in one cup that we had to save for the long term and 10% in another cup that we were able to save for the short term and maybe buy a bike or something. So I was taught to save in that respect, but because they weren't necessarily educated on that, I never knew. I never knew what a 401k plan was. I didn't know what a pension fund was. It wasn't until I became an accounting major and my mouth about hit the floor when I discovered all these various ways of saving and accumulating wealth that I didn't even know existed until I walked into an accounting classroom. So questions that anybody has. When you guys are searching for that career job, you don't want to just be so focused on, what's my salary? That is so short-sighted. You want to take a look into the benefits that the company provides. Do they have a pension? Probably not. Okay, do they have a 401k plan? Probably so. Do they do any kind of matching? Boeing matches, I think it was 50 cents on the dollar up to a certain amount. So if you set aside 200, Boeing, for example, would kick in the next 100. And so you would have that 300 growing. The downfall, the negative side to that is you cannot touch it. You cannot touch it until you retire. If you go and look at that as some kind of a safety net and you try and pull it out, maybe because you want to buy your first house, you will get taxed. They match the first 4%, then half of the next 4%. Is that Boeing, Amber? Or is that your company? Yes, it's Boeing. Oh gosh, they've scaled way back then when I knew someone that was working there. So Boeing, according to Amber, they match the first 4%. I'm thinking that's probably 4% of your wages. And then half of the next 4%. Good to know. You might want to mention the Roth. Yes, thank Nick. There's lots of different types of savings plan. Nick had a very good point. If you don't have 401k plans, there are IRA plans that you can also put into. One of them is a Roth IRA, where rather than getting the tax advantages now, you can pay taxes on that money and then later take it out where the earnings and so forth are tax-free. So that is another convention. There's so many things out there, so many different types of investment vehicles. I'm begging you guys, for your own sanity, take some type of a personal finance class. And I hear from people all the time, oh, it doesn't transfer. Well, it does meet one of the GE requirements, but you know what? Even if it doesn't transfer, if you guys learn about how to budget your money and how much insurance you need and what a 401k plan is and what a Roth IRA plan is and what is a stock and what is a bond, if you take all that in your earlier years, you will be so much better off. It's so short-sighted again to say that this doesn't, I don't need this to go to UCLA or I don't need this to go to Cal State Fullerton. So lots of different investment vehicles out there. That's what you'll learn about when you educate yourself. My hope in this chapter is to give you just a little bit of academic curiosity in that you would go search out some of these features and read more about it on your own. There's a pretty good book out there called Investing for Dummies, and I'm not calling you guys dummies by any stretch. The Dummies is a series of books, and they're funny, and they're very easy to read, and they're very insightful. And I can't remember now if I bought 3 or 5 copies, but I put them in the library for you guys to check out and read. I think they were only probably $15, $16 on Amazon when I bought them. That was a couple years ago, but great insight. So if you just want to read up on what are my different options. And the first thing, again, this goes back to something we talked about before, you got to track your spending. Because if you don't know where your money is going, I've mentioned this before, your money is managing you instead of the other way around. And it is eye-opening when you track your spending. And I told you, Starbucks, it cost me dearly until I gave it up. And I can't say I 100% gave it up because sometimes I have an occasional one, but I was spending $300 a month. That's crazy. And when I went in and figured out how much I could save towards retirement or a college fund or something else that was important to me, that made all the difference in the world and made it a lot easier to scale back on something that I considered a waste of my money. And we all make choices, right? For somebody else, it might be well worth the money. But to me, it was a poor choice of where my dollars were going. How did I know that? I started to track my spending. You can do it in Excel. I think I've mentioned Quicken. My mom uses Quicken. I have several widows that I've been helping recently with some finances that use Quicken, and they do a pretty good job on it. It's pretty easy. So any other questions?